Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, November 23rd, 2016. It's 9:52 a.m. Eastern Time as I'm starting this video, so the market is now open for trading. We, of course, have the abbreviated holiday trading week this week due to the U.S. Thanksgiving holiday. But wanted to do a video. I think it's time to do one on gold and the mining stocks. As most of you know, my preference is typically to trade the miners versus the metal, because when you get the call on gold right, the gold mining stocks will typically move in a multiple of gold. In other words, more on the upside when gold's in an uptrend, and they will fall harder to the downside when gold's in a downtrend. So I think it's time to take a look and maybe start scaling into some positions into either individual miners or GDX. So let's start with the charts of, let's start with gold, because as I always say, if you want to know where the miners are going, you just need to know where the metal's going, because the miners will follow the metal. I have different boards here. This is one of them. Boards meaning different mock-ups. This one's quite busy. We had this longer term target I was looking as a potential pullback target. These were supports and targets along the way. Each was hit, each produced a reaction. And a great example of technical analysis. Again, these were put in advance when gold was way up here. And you can see that this support level, or it's a support zone if I have two lines in close proximity, gold held support on that level for a while and then gapped down below it. So that's an impulsive breakdown that helps to validate that level. And then more importantly, it came back and back tested below. And if I'm not mistaken, we may have added a short on the miners at that point. I can't recall now. I trade so much, so many different things. You can just check the site. But you can see how well that worked. Broken support becomes resistance. You had this uptrend line here that was gold was respecting, and once that was broken, again, an impulsive move. When you see a break of support, or resistance for that fact, if the follow-up move is impulsive, it only helps to validate that as an important technical level, which it was obviously. Came down here recently, and this was my longer-term target. And unlike some long-term or final targets that I have, where I will often then go long or add gold or the miners as an official trade, I shared my thoughts, and I've had my suspicions on the miners that the selling might not be finished yet. A couple weeks ago I said more so I think in time than in price do we have downside from here. But gold is having a pretty tough day today because it's finally given up the ghost. It broke below, it limped below that 115.70 level. Tried to hold on to it. You can see if you look closely at the candlesticks, it closed, but then it closed back on it, pushed back on it, and pretty much closed on it again yesterday. But today we've gapped down quite a bit, so pretty bearish. Now my interpretation from my read on the charts and everything else is this is probably a flush out move in gold, or we're very close to a bottom. There's some, if you look closely, you have light lines, which are minor support levels here, and we have a pretty solid support level here. It's defined by a big gap over here in early 2016, as well as numerous reactions. So there's gold, and as I often say, I love to trade, especially for lasting swing or trend trades. I like to see bullish or bearish divergence on the 60-minute time frame. That's what we had here at the lows back in December. We had those lows were preceded with bullish or positive divergence, just as this high was back here with negative divergence, clear negative divergence. We also had a divergent high along the way. So this is a lot like what I talk about in the stock market right now, with this series of divergent highs, and I know that a lot of people have just thrown in the towel on shorts and think the market will go up forever. But just like the stock market, we had in this case a series of, this was two consecutive divergent highs, one back here, which certainly resulted in a correction. Just as did those other divergent highs in the stock market over the last couple of years. And then we had this second more powerful divergent high, which of course led to a more powerful correction, because as I often say, the scope of the move following a divergent high or low is typically commensurate, not always, but typically commensurate with the scope of the divergence. So bigger the divergence, bigger the fall. And now we have potential bullish divergence setting up here. We have about an equal low on the MACD, which is still positive divergence because prices are making a lower low. And if you're not sure what I'm referring to, when you draw it out, you draw a trend line here from this reaction low down to this low. So prices are making a lower low with the indicators such as the RSI and the MACD here making either a higher low so far or equal lows. And I say so far because divergence can be burned through, and until we get a confirmed bullish crossover here, we don't want to see gold to go much lower. That will then take out or negate the divergence on the MACD, although there's still some potential for a little downside on the RSI. So there's one bullish development, and a very powerful one in my opinion. You have gold quite oversold. We're at extreme oversold readings on the daily RSI, 24.66. Anything 30 or below is considered oversold. That's this blue line here. And you can just go back in time, just look at any time that the RSI has come close to or tagged that 30 level or moved below it, and you can see how we've had some big moves off that level. Here's one oversold reading. We were oversold here for an extended period of time. And when you get under there, you usually look for the cross back above the 30 level. But either way, you get the gist. I mean, that really led to that move, or ultimately this entire move here, this big divergent bottom. We had a negative divergent here, divergent high, and you can see the move so far from this divergent high right here. Okay, let's clear that out. A couple other quick boards to look at on gold. These are Fibonacci retracement levels, off the lows right here back in December of 2015 up until the highs. You can see that we're now coming up on the 60. We paused for a while at that 50% fib, and you can see it never fails to amaze me how well Fibonacci levels work. And this one, you can see how well that 50% fib has acted all along, and it did act as support here for a while, but we broke below it in the next stop, at least from a Fibonacci. Some of the key fib levels are that 61.8. So we're coming up on that, and that's a possibility we may get to that level. One other board to look at. This is a clean board. The first one I showed you had a lot going on there. A lot of trend lines and support and resistance levels. This just shows a clear picture of what happened recently with this big divergent high. Heck of a run up in gold. We were very overbought at this point. And again, you hit another overbought level with that divergent high. So that really led up to this move down. And there was a secondary uptrend line and a primary uptrend line. Once the primary uptrend line went, that was pretty much it. But it helps really drive home this chart's a little more clean. And what I'm looking at now are reactions here. So you have a gap back here. You can see all the levels that I'm looking at and making the case for the fact that gold does not only have that potential divergent low, but we're also coming up on support. So I'll make it simple, guys. I think now is a good time to start scaling in. For those of you, I know you've been asking for weeks and months my thought on gold. And up here I was, we had it as an official short trade, and I was personally short. After we hit some of those targets, it was getting a little overstretched, and I didn't have any desire to engage gold long or short, or the miners, so I just kind of stepped aside. And as trading is, it's all about being patient and waiting for a stock or a chart or an index to come to you, and that can take weeks, months, or even years at times. And if you can't make a very compelling case to be long or short, don't be in a trade. That's my thing. So there's GDX. Now GDX has even better divergence. You look down here at the MACD. Well, these shaded boxes show you the MACD is in bearish territory. When that signal line, the 9 EMA, is below the 0 line, that tells you the primary trend is bearish, as it was here leading into this was the end of the multi-year bear market in the mining stocks. And even though gold bottomed back in early December, the miners bottomed just about a month later in early January. And shortly after they bottomed, we had quite a few things that said this may have been a bottom, or at least this was a bear trap back here that moved below 13 that I highlighted actually in advance. Big explosive move. One level after another was taken out. And then you can see the trend indicators. That white line, the 9 EMA, moved above and stayed above until right here. So we had, as I just pointed out, a divergent high in gold as well as in GDX. I don't have the letters written up here, the annotations, but you can see the divergence, negative divergence, just like gold. Remember, I pointed out that first divergent high and then the second or even larger divergent high. And so this is what we're looking at on GDX. So what I see now is a divergent low. It's not confirmed. I need to see this MACD crossover, meaning that blue line, the MACD line, cross above the signal line. That's a bullish crossover. That will, at least in my book, I refer to this as potential divergence. And once we have a confirmed higher low then that is confirmed bullish divergence or positive divergence, in my opinion. And same thing here. You can see on the RSI so far, it is making a higher low against prices making a lower low. You can see there's various support levels here. I can see the possibility, and this is what I'm going to do for you guys. I did this on the marijuana stock video yesterday. I gave you scale-in zones because I can't really make a hard case for a buy yet. Reason being is because we don't have that confirmed divergence. It's still possible that if gold or GDX continues lower, that these divergences are taken out or negated by these indicators making a new low. So therefore, my preference right now is to scale in. We're close. We're retesting that low, so there's a potential for a double bottom here. I know gold's just made a new low, but on the miners we could double bottom. And we could go down to that 1910 area. So I think it's objective to scale in anywhere from where we're at now, around the 2050 level, down to about that 1910, 19, you could call it 19 level. I could lower that line a little bit. Let's go ahead and do that now. You can see some support a little bit below that. So let's just make it a round number, call it 19. So from 2050 down to 19, you scale in. That's a relative is a key word here, a relatively small range. I know percentage, 1.5 points on a $20 share price is it's not small. It's several percentage points more than that. But if for how much GDX moves in a day or in a week or in a month, that's a relatively small scale in zone. So I think you can scale in there. And you don't want to dig yourself in a hole because the miners, if things get ugly, could continue lower, especially if these divergences are taken out in both gold and GDX. And the next stop, I don't see solid support all the way until down here about the $17 level. So with trading, you don't want to dig yourself in a hole. You can't get married to any one trade, although I think the miners are close to a significant bottom. You don't want to bet the farm on it. So by scaling in now, that means you start adding a little bit here. Maybe they reverse off this 2050 level, and then you can continue to add. And you have resistance right here. You can just screenshot this chart, and I'll probably make this an active trade soon. And then in that case, I'll have some levels on there, price targets, short-term and long-term. But there's your first resistance level. Then you have this potential downtrend line, which will probably come into play. And it might come in later. These two might come in together. And if so, I could very much see that happening. If it takes a little while, let's say the miners just pound out a bottom here, as does gold. So in other words, if my assumption is correct that I've been stating for the last few weeks, I think there's maybe a little more downside in time, more so than price. That means a little consolidation here around this range. And when I say consolidation, GDX is a volatile little sucker. I'm not talking a consolidation zone of 1 to 2% on the up and down side, like the market did for the last couple months. I'm talking probably a wider choppy range, but then ultimately this would be a great buy point here. You can see the intersecting resistance zone and that downtrend line, and these are all levels to the upside. I haven't really fine-tuned this chart for this video, but these are levels that I had on the downside. They were supports or targets. Just like gold, when this level went, it came in a back tested, made a perfect back test to that 2567-ish area. So that's kind of what I'm looking at. Maybe a move there, a little pullback consolidation, a breakout, move up to 2565, and possibly beyond. Okay, now to just bring this video home, let's do what I like to do when I'm taking a look at a sector. Certain sectors more so than others. In the gold mining stocks, I really like to look at the top components because, as I often say, in each sector is a little different, but in the miners especially, there's a high correlation amongst the components. So therefore, birds of a feather flock together. And a GDX is simply a sum of its parts. So let's take a look at those parts, and I'll start in order of some of the larger holdings or market cap stocks in there. Looks like the screen is hanging here. Okay, there it goes. Here's ABX. This is the daily chart of ABX, Barrick Gold, one of the bigger companies in there. I thought I had these boards marked up. I don't have them all marked up. We can do that real quick. No big deal. So what I see here is a potential divergent low. I want to see that crossover on the MACD there. We have bullish divergence on the RSI, although it's still pointing lower. So my definition of confirmed divergence, we need to see this RSI turn back up. You can see where when you zoom in that the RSI is still pointing down, as is the MACD. So therefore only potential divergence. So I could very much see something like this. Let's extend this line out. Let's grab my little line drawing tool here. Take this line here. So maybe another push down. Each of these lines are levels that I've had for a long time on this chart. Again, I haven't cleaned this up, so these were resistance levels to the upside and other levels, but that's the first support level right here, and that's around roughly 1350. So maybe a move down a little bit lower in bearic, a new low, and then it turns around and reverses. I can easily see that, and that would put in a bullish divergence down here with these indicators and oscillators turning back up. So there's bearic. Let's see if there's anything on the weekly chart that stands out. Yeah, see this level here? That kind of jives with what I was saying. This is a line that I've had on this chart. I created that line back in March of 2013. It might have been a support level back here at the time. We broke below it. Numerous reactions from below. Once we got above it, we back tested it for several weeks. This is a weekly chart we're on there right now. And that level is like a magnet, so I could easily see a little more downside. It doesn't have to happen, but that would be my preference if you're trading any of these individual names. So you're talking another maybe 8% or so downside, maybe even more than that, possibly 10%. I don't know if I grabbed right where prices were right now. Maybe about 7% actually from where we're trading right now. And if you'll also note here, the PPO, which on a weekly time frame works a little better than the MACD, which is very similar. Right now, we're right at that white line. Remember, I'm only concerned with the 9 EMA, the signal line. It's still positive, just barely, but it's above. You can see it right above the 0 line. And what I'm referring to, again, if you're new to the site, if you're not, you probably hear me talk about this all the time. This is one of the most simple yet effective trend indicators. When that signal line is below 0, as it was for this point, the trend is bearish. And when it's above 0, as it was all the way up to about right here, that's actually where I have these green and red lines, the trend is bullish. And so forth. Red line, bearish trend. Look how accurate this thing has been. So it caught, it had you short here, it had you long here, it had you short here. And again, not a standalone buy or sell signal. I use it in conjunction with everything else, other trend line support, divergences on the shorter term time frame, but again, just helps you gauge that longer term trend. So fast forward to here, we had a bullish crossover. Let me get rid of those shaded box back at this point. And since then, it's told us that the trend, the primary trend in bearic is bullish, and still is. And just as this white line above or below the 0 line works as a great trend indicator, it also, that 0 level, as it did here, as it did back here, as it did back here, and on some of these tests, it works as support or resistance when tested from above or below, and I'm referring to the 0 level, the dotted line. So right now we have a test. We're in a bullish primary trend, and that 9 EMA on the PPO is back testing the 0 line. So that is another way to buy. Just like you buy a stock pulling back to support, which was what I'm talking about doing here anyways, price-wise, you also can go long or additional confirmation the fact that this is testing that level. Now, should that support level go, especially on a weekly basis, being that this is a weekly chart, and that 9 EMA or the signal line goes below, takes out that 0 level by a good margin, then it might be telling us that this trend here was just a big bear market rally in a larger bear market rally in a much larger secular bear market, at least for Barrick. And Barrick's just one of many, but it is one of the bigger miners. That's why I spent so much time here, and I wanted to go over some of the trend indicators here. So there it is. So Barrick, we can see a little more downside, and if that's the case, then GDX probably has a little more downside. Newmont, again, charts are hanging today. Seems to do that when I'm recording with the screen software. Here's Newmont. Oh gosh, I don't see too much. Trend indicators still bullish. Got quite a bit oversold, but we've already let the air out of that bubble right here and had a nice pullback, which is healthy long-term action, by the way. If you guys were, for those of you who are very bullish gold and the miners long-term, just remember nothing can go up straight up forever. These stocks, miners got extremely overbought to levels that may have never occurred historically, at least not for the last decade here. You can see we haven't had an overbought reading like this down here in decades. So this is healthy. This alleviates the overbought condition, clears out some of that excessive bullishness that we had in the miners and in gold, and then makes a way for another potential for another leg up. I mean, this was just one straight advance. If you look, even if this is just an ABC wave up and that's a B down, there's a big C coming up. And who knows, maybe this is wave one up of a 5-wave primary count, and that's just wave one up, wave two down, and with the big 3 to come, and then 4 and 5. So who knows? Again, I'm not a big Elliott wave guy, but I can just tell you this was a straight advance, and this is a healthy correction from a longer term point of view to clear out that excessive bullishness. And it was a one-sided, lopsided trade. That's not healthy for a sustained move. All right, let's go on a little quicker, and I'm not going to go through them all, guys. I'll just go through a few. Here's GG, Goldcorp, another one of the big ones, coming up on a very, very solid support level. Again, here's a support zone. You see two red lines, or two lines close together. There's gaps here, quite a few reactions, just a whole bunch of reactions to the left that make up this support zone there. And here we are. So you have a stock that has had a heck of a correction. It's fallen almost in half, and it has come down to support with bullish divergence in place down on the RSI and the MACD. So now Goldcorp may want to walk its way down to the bottom of that support zone, but I mean, it looks, if you're into individual names, this one looks good here. You can buy it here, give it a little room on the downside. It's like I said, a pretty solid support level. Maybe a weekly close somewhat below that level, and the divergences are in place, not yet confirmed. See, again, there's the same story. You're going to see this almost across the board because these stocks are so tightly correlated the way they move together. So you'll see unconfirmed divergence, and so again, you can see maybe another low, whether it's in time, a few more weeks, couple months possibly, I don't know, hard to say. But price-wise, there's not a lot of downside. And that's why I think if you're a patient investor, a long-term investor, a trend trader, or even a swing trader that is willing to give these things a little time, I think the risk to reward is very positive right here. So you go long around this level, maybe you scale in, that means add a little this week, add a little more next week, whether prices are up or down. Just don't add down below support. That's what I'm saying. Don't dig yourself in a hole. Most experienced traders or investors will only average up on a position. That means if it starts going in their favor, whereas the retail investors, dumb money, tend to average down with the mindset, well, I'm lowering my cost basis. But if it's in downtrend, you keep buying down, finally you realize you've dug yourself in a hole that's hard to get out of. So I'm okay when I scale in. If I say that I'm going to buy here and I'll continue to add down to this point, but not below. There's a difference there of having a predetermined plan where you're willing to add down on a position up to a point and then no more. And at that point, you're more concerned with, okay, where do I stop out? Do I have a hard stop below that level, or do I start scaling out? And again, it all depends on the position that I have as to which way I do to get out if it goes the wrong way. But there it is. So you bounce. There's targets along the way. I don't have them all drawn out here. I could add for you. I'll put certainly a target right there. A couple reactions, quite a few. That would be your first bounce target. Almost $14 and resistance here, downtrend line, and any or all of these lines. And again, we're looking for a trend reversal here, so I'm not even focused on targets right now. If these start to play out down the road and you're a longer term investor, you should be looking for possibly a move up to, maybe these previous highs are well beyond. In fact, I'm probably leaning towards more of the beyond, but we'll see. Too early, way too early to tell that right now. All right, a couple more and we'll hang it up here. Just trying to drive home the point. Here's AEM, same story, potential divergence not confirmed. Don't see a lot stands out on the chart other than the trend indicators. That PPO is still above that zero line there. And SLW, Silver Wheaton Corp. Here's a beautiful, right at support. We had an overshoot of that support right here. But you can see what I'm referring to when I mentioned the support level. Look at all these reactions from above, the reactions from below, reactions from above, broke down, impulsive, reactions from above. So this is a very important or very solid or significant support level, I should say. We had a momentum fueled overshoot. You guys, if you follow the site for a while, you've heard me say that term hundreds of times, momentum fueled overshoots. It's what I refer to when the downward velocity or upside velocity is so strong, such a big move coming in. It's very common and almost expected to see a key support level, even if it's going to hold, to have prices briefly overshoot and then snap back above it. And that's what happened here. So this is really the second test of that support. I disregard this momentum fueled overshoot. And so there's a stock at support with an additional support level below. The big support, if things really get ugly, but the long-term case is still intact, in other words, that the miners did bottom back here in early January, then these are, and a lot of these, I didn't go over the earlier charts, but I could see it there, and I should have mentioned, this is my last straw support. These are where the basing patterns occurred back in the, from mid to the end of mid 2015 up until early 2016. A lot of the stocks and the miners based around here and then broke out, and you can see this on a lot of them. So this would be my final straw support down here that should hold if things get really ugly in the miners, yet the longer term bullish case is intact and we're going a lot higher. Now, if that's going to happen, how much pain are you willing to endure? Because I'm going to use my measuring tool. That's 18% drop in SLW. And, not to beat a dead horse here, but if you guys are trading nugget and dust, fine. If you do, you know my thoughts. I've shared it. I rather short the opposite version if I want long or short exposure. I don't buy those things long because the decay is absolutely atrocious if you're holding them for more than just a few days. Buy GDX. If you have a margin account, you can buy 3 times as much GDX. But I'm getting off on a tangent here. You shouldn't do that because GDX in itself is so volatile that you need to beta adjust that down. And if you take nugget or dust, you should be taking about 1/3 of what you might normally take in GDX. But so those are my thoughts. And if you like the individual miners, that's what I often do. If I get the call right on gold and GDX, I can almost always go into the components of GDX, drill down, and pick my favorite names, whether they're gold or silver mining stocks. And just so you know, a lot of the silver miners like Silver Wheaton are within GDX. They pull both metals out of the ground. So many of them do. So you can that's why you'll see some of the silver stocks. But speaking of that, let's get off the miners. I think I've drove the point home that we're at or near some pretty key support levels. Here's silver, the silver ETF. Nope, that's silver miners ETF, which I should touch on while I'm in this video. I know a lot of you guys like to trade the silver miners or the silver the metal itself, which I'll get to in a second. Look at these beautiful reactions. See the big gap down below? Once we gapped above there, that was support. So we're coming up, and I've had these targets here for a while. This was my first target zone hit, second target zone hit, and just look how well I'll have to move that. Let's go ahead and move that. Second target zone. Look, we fell right in the target zone. We bounced, came down, broke it. We've had this consolidation pattern of action recently, and we're broken below it. And this is why I'm leaning towards that one last thrust down, maybe a little more downside. And that's about another 3.25% from where we're at right now on SIL, the Silver Miners ETF. And that would be a great target. This what I put back here at, now I've just dragged it so it was modified today. But I created that back on October 24th as a potential third target. So all the way when we were back here somewhere, right after this wedge break, this was my potential third target, and here we are. And again, this chart's probably, you can reference that on the site. And as with a lot of the miners, including GDX and gold, we have this potential bullish divergence. So this is a great buying opportunity. You can wait, try to squeeze out that last penny. From my experience, if this is where I think it's going to go, and a lot of eyes are watching that level, one of two things is going to happen more than likely. More than likely, we either reverse shy, and that leaves everybody out that was trying to get that perfect entry. They miss that opportunity, and then they end up either chasing it or missing the move completely. Or what's just as common is you get a flush out washout move, a little fake out move. And what it does, everyone that stepped in here to buy, it runs their stops. They say, oh no, my support level didn't hold, and it maybe overshoots. There's a little gap below there. You can see that gap that can act as support. So one of these two may happen. I don't know which one is going to happen. It's hard to say. I prefer a reversal here or before, because that would keep these divergences nice and healthy. That's my preferred scenario, and that's why I'll probably continue, start scaling in now. But give it a little room if we do break below for a potential flush out move. And then if it continues much below there, that's where I'm more concerned with stopping out, because what will happen is these divergences will then be undone with new lows, and we could head a lot lower. And most importantly, I don't trade any of these stocks or these ETFs, meaning Barrick, Newmont, SIL, the silver miner ETF, GDX. I don't trade them in a vacuum. In other words, I don't trade silver off just this chart. I look at what GDX is doing, what gold is doing, what the metal is doing, which we'll take a quick look at right now, and then we'll wrap it up. Here's silver, the ETF. This is really my last straw support here around 1527. Busy chart again, forgive me, I might have a cleaner board somewhere else. I'm just trying to get through this video quickly, but you can see a lot of reactions over to the left. Somewhat sloppy, but here's a couple reactions from below, reaction from above. Once that level was taken out, you can see, so reactions here, reactions, some here, there's a gap back there. So this was a level I deemed significant right here, and we punched above it, came and back tested, moved up, and now we've come full circle. We're almost to that level again. We'll have an initial back test, so I think it's really a great time to start scaling in now, whether it's in the metals or the miners. Like I said, it's very objective, and the risk return is huge. So even if you're stopped out, even if we blast on through there in gold, silver, SIL, GDX, they all break support, what's your downside? In percentage terms, it might be pretty big because these guys move so much, but if you adjust your position size down, it's not a lot in relative terms to the to the potential for the gains if you get in here, and the metals and the miners are heading back up. And even if you're looking to just play a bounce trade, I mean, there's certainly some very solid levels now above, so the miners and metals have their work to do, but I would say at minimum a good swing target, well, I should say at minimum, let me just give you those targets real quick. If you're silver, I know that at least somebody in the room asked for my opinion on silver. There's my first target around 1625. I'd see a reaction from there most likely, pull back, and then a move up here at about that 17, looks about 1710 or so. And again, these are all additional levels along the way. All right, let's leave it here. This has been Randy Finney with Right Side of the Chart. This video will be at this time just for members of the site. Please don't share the link. What I do if any of the videos that are only for members, those are released after some period of time. Then I release them to the general public. But as of now, please don't share the link. And but if you do watch this on the YouTube channel, as always, give it a thumbs up if you like it. That does help. And let me know if you have any questions. Just drop me a line within the trading room or via private message. Thank you very much.